This is day one of our coverage of the Reuters Investment Summit. Our first guest, perhaps best known for coining the term BRICS. Since September, he's been heading up Goldman Sachs' asset management business. Jim O'Neill joins me now in the studio. Jim, great to have you here.
Thank you.
I want to start with this idea of a common bond. Newsworthy, of course, this morning again. Is it the end game, something like that, do you think?
I think it gets us a bit closer. I mean, as we've seen from the various policymakers that have talked about it in the media, there's no agreement about it. But I quite like the idea. I mean, at the core of all of this trouble that we're having, in my judgment, is governance and questions going right back to how EMU was created in the first place. Yeah. And if EMU is to thrive and to recover from this mess we're in, something like a common European bond as a symbol of a more truly coordinated and shared agenda by Europe's policymakers is not a bad idea.
I mean, I know you've talked about closer fiscal harmonisation before. Yeah. A common bond would mean a common fiscal policy, wouldn't it? I mean, is that possible? Is that realistic?
I don't know if it means necessarily a common fiscal policy. What it certainly means is one in which some central entity has some approval process, which is there's many shades of grey that can be involved in that, but it certainly involves some greater leadership at the centre about fiscal policy.
Is the ECB in charge?
I think every time Trichet appears on the scene, he demonstrates quite a lot of leadership qualities, but as we see throughout the rest of the European area, too many European policymakers and ECB members offering their own opinion on virtually anything, with some obvious candidates being particularly guilty. And the idea that the ECB can be as truly independent from all of this as some of them often say, it just doesn't make sense, and that occasionally adds to the problem.
I mean, in your new role with your new house on, I mean, given that uncertainty, what do you advise clients to do in Europe? And when they talk to you about whether they should be buying into sovereign debt or the equity market here, what are you saying to them now?
Well, uncertainty is a fact of life. The first thing a general thing I say to any investors that we have, or potential new ones, or anybody that I meet in financial markets, this idea that we've suddenly got a degree of uncertainty that is new, I question. What's really happened post-global credit crisis is everybody thinks they know the uncertainty. The truth of the matter is the uncertainty was always there. It's just that people didn't realise, or a lot of people didn't realise. And this is coming to the end of my 29th year in this business, and it's always uncertain.
Do you buy peripheral debt in this situation?
I actually think it's not a bad thing to consider doing. I mean, it's going to, today's probably, I've not seen where markets are today. I'm guessing, given the weekend news, today's not a great day.
Spreads have widened a little bit ahead of the budget tomorrow night.
I think if you look at where spreads are, or put it like this, last Wednesday when the mood seemed to be particularly cataclysmic, my view was close your eyes, buy a basket of these things, put them away for 6 months, don't look at your Reuters screen, and you'll probably end up pretty happy by the middle of next year. And I still think that case today. I don't think EMU is going away. You can see that key European policymakers are increasingly putting some big new ideas on the table, some of which will emerge. And when that happens, it will all look somewhat better. In the path to it, it's going to be a mess.
When you put your note out looking ahead to next year, what are the biggest risks, do you think, to global growth next year?
I think the biggest risks are positive ones. One or two people have started to revise higher their forecast for the US, including my old colleagues in the Goldman Economics Department. I fully agree with that. And so Goldman Sachs is now more optimistic than the consensus about the US for the first time in 5 years. The payroll numbers Friday gave a few people a bit of let them off the hook. But I think the most important coincident lead indicators in the US are improving. And so I think in terms of true shocks or risks, the first one is the US is going to do better than people think. And with it, I think we could be looking at GDP growth of 5% for the world.
And then, of course, we hear about QE3 now. How much do you worry?
I don't see QE3.
All right, but how much do you worry, given what we've seen on QE2, about the inflation threat in the US and what that does to investing in US assets?
I think there's, as Bernanke said over the weekend, there's virtually no signs of inflation. If anything, despite the growth situation looking better, we're seeing evidence to the contrary that prices are still drifting lower. So whilst big picture, of course there is risks of inflation, there always are, but so long as the Fed can exit when they need to on the back of a more robust economy and lower unemployment, we'll worry about that then, but in the immediate future, no risk.
Closer to your business now, I believe about 13 billion outflows in Q3. Why are clients taking that amount of cash out, do you think?
Outflows from
the fund?
I'm not sure. I'm not aware. I'm not sure what you. I'm not aware of what you're familiar. I'm not familiar with that number.
The statistic I've got is assets under management up 21 billion, mostly due to appreciation of assets, but 13 billion in net outflows in Q3.
I think what might be behind some of these. I mean, we have funds in lots of different products across the whole gamut of investment classes. What has been very strong is flows into credit products and also into emerging market debt. It might well be that there's been some reversal in some of those, but to be honest with you, I don't think that's actually true. So I'm not sure about that data.
Biggest tip to finish up with, investment trade tip for 2011?
I still love equities. I think we started a bull market in equities last year. We've had a bit of a correction again in the past few weeks. We've got a lot more upside to go.
Okay, Jim, thanks a lot for that. Jim O'Neill from Goldman Sachs. To keep up with the latest on the fund industry, take a look at the Global Investing blog, that address at the bottom of the screens there. I'm Axel Threlfall. This is Reuters.